Welcome to Markets Now. I'm Michelle Rook along with Darren Fry, Water Street Solutions. Mixed closes in grain and livestock on Monday. Darren, let's talk about corn and soybeans under some pressure. How much of that was kind of tied to these rising COVID cases in China?
Well, I think the market is very sensitive to what China is doing. And when they talk about opening back up, getting their economy going, we see a very risk-on trade. And when they start talking about closing that economy back down, those lockdowns, and maybe constraining people again, we know that the market wants risk off. And so that was part of it. I think some of it also is just the fact that we did get a little bit of rain in Argentina, and that probably hurt us a little bit on the corn side. But, markets kind of recovered. We saw beans well off their session lows, and we saw wheat closing higher, a little bit of a technical bounce, and corn closed pretty close to unchanged. So bull spreads starting to work here in corn. We're starting to see the March over the May, the March definitely over the July, and Dees really gained on the March today. So I would say that bears watching, maybe some export business coming, who knows?
Okay, we're hoping for some because export inspections were nothing to write home about.
Yeah, they were terrible. I mean, wheat was horrible. Beans were good, but below what the trade was looking for. And obviously, we need China to come in. That's the big question mark, is will they have to buy corn before this marketing year is over?
So we had lower weekly closes and everything last week, Darren, and you mentioned that we actually didn't have too bad of a close here today. But technically, what are you watching in corn? Because that market looks probably the most vulnerable from a technical standpoint.
Yeah, if we don't bounce from this level, I'd say we have to go down in that 640 area. And then I think that is where a bounce would come from. Probably back up in the 660, 670 area. Now, this is versus Dees corn, so you could add a little bit to that for March here. But I do think that we will get a bounce. It's just from this level or from a lower level. Wheat could bounce from current levels, and I am still friendly soybeans for higher markets. So I think the market is oversold after last week's pummeling. And so I wouldn't want to be taking on new short hedges down in here. I'd be looking for a bounce to sell.
So you mentioned the rains over the weekend in Argentina. And of course, the markets have been, corn and soybeans have been trying to almost build in already this big crop in South America. Is that the main thing that kind of keeps capping this market in terms of getting over some of these objectives, or is why corn looks so tired, or what's going on?
Well, I think there's a lot of challenges around the corn export side because of how big the recession is supposedly growing to be in the world. And we continue to see the lack of Chinese business, not just in corn, but also in our pork exports. And so I think that's problematic when we see the geopolitical strain that we have between our country and theirs. I know that President Biden met with Xi Jinping here today, and hopefully better things will come of that. But I think until we get a better export program, corn is going to struggle. I will tell you that a lot of these balance sheets look awful tight, especially now that we've had problems with wheat in both Argentina and Australia. And I think the USDA has some adjusting to do here on some, subsequent reports. But so far, we just haven't seen them tighten those levels up yet.
Well, the stocks in the last report, both globally and from a U.S. perspective on wheat, were at 15-year lows. When will the market respect it?
It's a great question. We need a catalyst. We need something that gets us over some critical levels. I have key resistance in March Chicago wheat at 881 and critical at 921. And until we get over those levels or have some spark to do that, you have to continue to look lower here for lower prices to come. But it's an interesting trade right now. It's a little oversold from last week's decline. And I think corn and wheat both could give us a bounce in here before going lower.
Because you do have issues on wheat in Argentina, Australia. It looks like a lot of their crop is going to be lower quality, right?
Yeah, and maybe even lower production. I mean, so much of it has been flooded out and it's been underwater. So it might not be just a quality issue there. There could be a decline in production. And then, of course, is India's crop really as big as India's crop's supposed to be? And I think that all bears watching. But in addition to that, look at the corn in Argentina. The USDA still has them at 55 million metric tons. It's just not going to happen. And we know that that's coming down. but I think also our exports have to come down, and they left those unchanged in this last report. So
Yeah.
they still have some work to do, and they need to sharpen their pencil as we get into January.
Yeah, that was a bit of a surprise. So we're still working on the grain export deal in the Black Sea, and the deadline is coming up here. So where do you see this going?
Well, it's an auto renewal situation. Like if they don't stop it, it's going to auto renew. I don't know for how much time, but from November 19th on, it'll just continue. I've heard that talks have gone poorly. I've heard talks have gone positively, but yet there's still no concrete news as to what has been resolved. So it's a day by day, and we'll have to wait and see. But I'm sure that if something goes awry there, that could be the spark that gets wheat and corn going.
Okay. Cotton down pretty hard here today, and as you and I are already talked about, COVID cases and rising in China, the lower crude oil market seem to kind of be what that market tends to follow here. But we've had some nice recovery in the cotton market. Do you think the bottom is in there?
It's hard to say whether the bottom's in. I have a count that would tell you it is, and we're going in 118 area. Also, there's a count that would say we got one more trip lower before the bottom is in, and we can recover to that 118 area. I think over time, that's where we're headed. We're headed higher, as I think fundamentals are pretty friendly here. And, it won't be long until we're talking acres, and will we have to buy some acres there and have a market recover in the spring to get those acres? But ultimately, have we made a bottom yet? Too hard to know. The charts aren't decisive, but I think over time we will head higher in the spring.
And the cattle market, of course, feeders got some help from the lower corn, but the live cattle futures here have been, a bit disappointing. And I don't know if a lot of that last week was just tied to disappointment about the cash trade. What do you think is going to move this market back higher?
Well, the seasonals here, we just start switching a little over to pork. We see that hurts our trade a little bit, but I am bullish the cattle. I think we got one more trip to higher highs here, and I do think that we'll do that. But right now, I think we just got to finish this correction. We're going to get a new report out here this Friday, cattle on feed, and I'm expecting that maybe to be a little bit supportive, so that might be the catalyst that starts moving us higher.
Okay. We've had two lower weekly closes, though, from a technical standpoint. We don't have commitment of traders report info out yet, but do you think that the funds will probably still defend this long position? Because that's kind of key here, too, moving forward, isn't it?
Yeah, it will be. It depends on what they do. And like you say, we were delayed because of Veterans Day here on Friday. But if we see that report come out and they have done some liquidation, maybe that'll ease up the concerns. If they're going to defend it, obviously, they haven't liquidated and they'll buy more as we get strength. But I'm not looking for a big break in cattle. I'm still looking for higher. And I don't know what that catalyst will be, but I think the charts have incomplete wave structure and need to go higher one more time. Same thing with hogs. I don't think it's bearish quite yet. I think we need a trip higher in both, the December hogs as well as the deferred contracts.
Appreciate your time as always, Darren Fry, Water Street Solutions with Markets Now.
Thank you.